We have heard a lot of speakers talk a lot about impact on a global basis. You heard Wayne yesterday and all the work that went on with the Calvert Foundation. We are an organization that is funded by the Calvert Foundation, so I don't see Wayne here today, but I want you all to know that what you're about to hear is an example of the types of social investing that Wayne's organization is doing, and then what we're doing with that funding in our social work as an organization. You heard Ali talk internationally of the work that Acumen is doing. I had a brief conversation with him at the end of that luncheon yesterday. They are, too, thinking about bringing what they've learned on the international scene back to the United States. And so I'm very, very excited about that. I think that the international issues are massive and important, and I love thinking globally. It's not my background, and so I've been very inspired by all these speakers. But I want to share with you a little bit about what's going on in Virginia. I'm going to bring you kind of back to Virginia and a social entrepreneurship experiment that is happening here in the Commonwealth and is being watched throughout the nation because we're testing some new capital models in financial services. I should start by telling you a little bit about myself. I'm a recovering banker. Banking used to be an honorable profession until the past couple of years, and I grew up in community development banking. I started out in product management, traditional banking, trying to create products for consumers. And in 1992, I had a boss come to me and say, we have this new regulation called the Community Reinvestment Act. It's a compliance thing that the government makes you do. The government insists that we have to pay attention to people who can't afford our services and somehow serve them. And so we need you understand marketing, figure this out. And I'm like, I don't do legal work, I don't do compliance work, I'm a marketing person. And they said, this looks like credit, it looks like what you're doing in credit product management. Come figure out how we stay in compliance, how we do what we have to do to stay out of trouble, and do it for 2 years, and then you can go anywhere you want in your career. Well, all right, you don't say no to the boss too many times. So I went and I started doing and using my MBA in a market segment that had its challenges. There's basically 3 market segments in banking. You have the wealth segment. They have lots of disposable discretionary income. You have the mass market, which is the market I was working in. And then you have what we call the lower or moderate income market, where the discretionary disposable income every day is a challenge. And there are lots of social issues that affect the income issues of the households that we're trying to serve. Well, I was hooked. That was my entry into community development. I've been doing it since 1992. I did it for a big bank in billions of dollars, like you've heard in some of the speeches today, $2 billion. And then I retired in 2005. And then I'll tell you a little bit more about what I've been doing since retirement. But the other thing I want to tell you is that as I talk today, I want to tell you that I too come from maybe what you would call a third world county. I live in Craig County, Virginia. So my reference point is very, very different. You're all laughing. Some of you know what I'm about to say. My reference point in Craig County, Virginia is very, very different than a Northern Virginia or a Tidewater reference point. My county is 5,200 people, total population. We do not have a stoplight. We just got 911 emergency service 6 months ago. I just got DSL service 3 months ago at my house. And 1/3 of the population in my county is on disability. So as I talk to you about some of the issues that we're working on in the Commonwealth of Virginia, I want you to remember that while malaria in Africa is very, very important, there are also people here in the Commonwealth that still need to advance in order to use all the tools. We talk about streaming. I don't know how to stream because I can't stream at home. I don't have that capability yet. So that'll be my reference point as we go through some of what you're about to hear about Virginia Community Capital. Impact investing. I thought I'd just talk and tell you a little bit, the concept of impact investing is we're always working for a double bottom line. Everything that we do in our world, the first thing we do when we look at a potential transaction in our bank is we put it through a mission test. Because if it's not serving the mission that we're all about, then we will send that transaction to a traditional banker. There are a lot of good community bankers in the Commonwealth of Virginia. They have capital, traditional capital, that's looking for a return, that looks for efficiencies in markets, and they can serve a lot of the transactions that are efficient and can afford market rates. And so the first thing we do is we look for mission, and then we look at how do we blend mission and also bring mission into a sustainable business model. These two quotes are just a little bit of background around impact investing and what we're trying to achieve on a daily basis. Community development. We are a community development financial institution. For those of you who aren't familiar with CDFIs in short term, there are about 850 CDFIs in the nation. Some of them are operating for-profit, some of them are operating not-for-profit, some of them are regulated banking entities, some of them are just private not-for-profit loan funds. Most of them are small in asset size. Probably the average asset size of the CDFI industry is somewhere between $4 and $5 million per fund. So we, in a very short period, have become a relatively large CDFI. But when you add all the activity of these funds together, what I want you to notice is they have $41.7 billion of assets. So you're going to hear a lot today about things that are happening locally and that are in the millions of dollars. But aggregated as an industry, CDFIs are it's this quiet industry that's been continuing to lend through the economic challenges that we've had in the past 3 or 4 years. And we're growing. We're growing every day. Virginia Community Capital is Virginia's largest CDFI. We chose a model, and I'll tell you the reason why we chose this model in a minute, but we chose a model to be a regulated financial institution focusing on affordable housing, job creation, and community facilities such as healthcare and childcare and some of the important things that have to be in a community in order for that community to be vibrant and sustainable. Our assets today are about $85 million, which is relatively small when you just heard a day and a half in the billions. But in the CDFI world, that makes us one of the largest CDFIs in the nation, and we've gotten there in just the past 5 years. We have continued to lend through the downturn. We have found great opportunity in the last 3 years as traditional banks have struggled with liquidity and mortgage charge-offs. We've been able to step in and fill some gaps, and there's been some community projects that have been able to continue despite what was going on in the economic times. And in the past couple years, we've been able to create 974 jobs with our financing. I wanted to give you pictures a little bit of the type of financing we do. Being a recovering banker, I talk a lot about finances and I talk a lot about capital structure and business models, and maybe that gets a little boring. And so I have to remember to bring in the mission side and the heart and the passion of why I'm in this business to begin with. Our story started, one of our first projects was in Floyd. The picture that you see at the top that says Farmer's Food, this was a closed, run-down grocery store in Floyd, Virginia. If anybody goes to Floyd for country music and knows the Friday night jamboree, there we go, Pete goes. Floyd is in a community that has one stoplight in the county, but is a town that really does not have any major industry. It's an eclectic town that has tried to have a vibrant small business economy. They don't allow Starbucks in the county. They don't allow any chain food in the county. Everything that they do and support locally, they want it to be locally grown and small business in nature, as opposed to chains and big and homogenized like the rest of America. So Floyd wanted to take control of this building and figure out what to do with a grocery store that had closed down. The next picture that you see to the right is the rehabbed grocery store. This is a project where 26 citizens came together, funded a little bit of their own money, and came to us and said, we're going to revitalize this building. For those of you in the real estate business, this is a Class C property, and they wanted to break it into 14 retail leases. So I had a Class C property with non-major company leases to underwrite. But we believed in the citizens. They put their planning, their resources behind it. We helped them for about 1.5 years visualize and find some grant funding to supplement this, and then we brought some debt funding. And this project right now, I will tell you, is 100% leased with 14 small businesses that were homegrown in that county. The next project that you see slightly down on the left is a new medical facility in Arrington, which is about 25-30 miles south of Charlottesville. It's a community health care center, if anyone's familiar with the community health care concept. The people of the Arrington community were driving 50 minutes into Charlottesville for all of their medical care before the community health care organization was founded. They now can get primary care right in their own county and then just go to Charlottesville as they need specialized services. And then the one on the bottom is up in Duke Street. That's a rehab that is being turned into 8 units of affordable senior housing. I know I have some senior housing people here in the room. We spent some time talking yesterday. It's an example of the type of affordable housing that we finance when other banks won't. Virginia Community Capital, here's our story. We have a really unique story, and this is why we are a test and being watched by a lot of people in the CDFI industry and a lot of governments around the nation right now. Mark Warner, in his infinite wisdom, I am a big fan. Whatever political side you're on, this is not a political statement. This is a statement of business model that I want to talk to you about. One of the things that Mark talks about is blending government and private charity and private capital. And how do you create models, and how do you get business models using some government subsidized or charity money, and yet using capital methodology to really leverage that and really have impact? Exactly what we've been talking about. So in 2005, Mark looked around and he said, I want to do more to create jobs and get capital flowing in underserved markets in Virginia. How do I go about doing that? And he found 2 loan funds that the Commonwealth was running, one in the Department of Housing and Community Development and one in the Department of Business Assistance. And he said, I'm going to privatize these funds. The reason I'm going to privatize them is because I know if I privatize them and hopefully do it in a way that they're always going to stay mission focused, that privatization can get leverage off of this $15 million. So in late 2005 and early 2006, a nonprofit organization took $15 million of government, what was in the government, state government bank, and that money was privatized. And today we've been able, so far, to grow that to an $85 million a year program. We took that money with 2 requirements. They said, well, you got to come up with a governance structure that will always ensure this is mission focused. We don't want you to grow something and then sell it to the highest bidder. And the second thing is we want you to be a regulated financial institution because we know you can get more leverage in a regulated environment than you can if you're not regulated. You'll be able to attract more capital. So that's why we're a bank. We took it as a nonprofit. We put some of it aside, and we started lending some of it right away in 2006. And the part that we put aside to open a community development bank as a subsidiary of our nonprofit. So what we created, and the Federal Reserve scratched their head as we went through this process, but we created a nonprofit bank holding company. It is a really unique model. It is not one that the Federal Reserve or any of the banking regulators were used to. They're still trying to figure out exactly how many of these they have. They've come up with 6 so far. So there's 6 of us in the nation that are nonprofit that own banks, and 3 of those 6 are Indian tribes. So I thought that was an interesting thing. I have not studied the Indian tribes, but Indian tribes by definition are nonprofit. And then there's 3 of us that have been started with capital from another form, ours being from state government There's one up in Connecticut that was started from a settlement of a lawsuit, and there's one out in California that was started by some private individuals who made a lot of money and decided they were going to start a nonprofit bank. So there's these experiments that are starting to pop up all across the nation that people are kind of watching and saying, oh, can you have good banks that are mission-focused that aren't going to create what we just lived through for the past 3 or 4 years? And VCC is one of them. And you should be proud. It's your state that's really trying this experiment. What do we focus on? As I said earlier, we focus on housing, jobs, and services. What's unique about the CDFI model is we bring capital, but we also bring what we call technical assistance or consulting services. That's the model in the CDFI world, because we know that a lot of times in the segments we're trying to serve, they need both advice and knowledge in addition to capital. And so we bring both of those and support the consulting service side and those free services through the nonprofit side of our world, and then support the lending through both the loan fund and the bank. Organizational structure. This is where I get a little business side. We are mission focused, but let me tell you a little bit about the business. You'll see the nonprofit fund. We have a subsidiary bank. Banks by definition are for-profit. There is no such thing as a nonprofit structured bank. There are unprofitable banks out there. But by definition, structurally, banks are supposed to be for-profit. They're supposed to be making money. The regulators want them to make money because your money is invested in them as deposits. And they need to be and always want to be financially stable. So our bank is a for-profit, but the stock of our bank is 100%, basically 100% owned by the nonprofit. So as the bank becomes profitable, we have not done this yet, but if we ever declare a dividend, all those dividends will go into the nonprofit work that we're doing. So it all stays within the system. We're really basically utilizing a for-profit banking model to leverage private capital into the mission lending that we do. So we've taken a traditional business model that says you have a for-profit holding company, a for-profit bank sub, trying to bring financial services, and we've just changed the top and said our top is going to be a nonprofit and it's going to be mission focused and it's going to own this bank, so as the bank grows and becomes successful, it can assure that the bank's always going to stay focused on the markets that we're trying to serve and not be sold off to Wall Street. Does that make sense? We've also been able to help Virginia attract some national funding, and what you see there is a tax credit entity. We've been fortunate enough to win allocations of something called New Markets Tax Credits, which is a federal program that helps subsidize businesses that are creating jobs. And we've been able to we won $15 million in 2008, and then we just recently won another $20 million. And we're using those tax credits to help the healthcare centers that you saw earlier, help get more of those built in medically underserved areas. Another interesting tidbit about Craig County. Until 2 years ago, we didn't have a doctor or a dentist in our entire county. We had to drive to Roanoke, which is a 45-minute drive across the mountain, to get any kind of medical service. So we do now have a doctor and 3 nurse practitioners and 1 dentist in our county because we have a community health care center, finally, in Craig. Community Capital Bank we opened our bank in 2008. We were the last bank to open before the Wall Street collapsed in September of that year. And for 2 years, there wasn't a single bank chartered in the nation. We got in right under the wire. Our bank is also a CDFI. We're certified mission-focused community development bank. I'm proud to say you're going to hear in a little bit about a new legal structure called B corporations. Some of you have studied this, I know, in your classes. We are B Labs certified. We just got Gears rated. This will all make more sense to you in the next presentation. But we are a 5-star Gears rated organization, which is as good as it gets, and we're really proud of that. So Stephanie's going to tell you more what all that means. Our assets right now are $57 million, very, very small in banking terms. But very, very big in CDFI terms. And we doubled in 2010, and we're on a growth trajectory that's really exciting. We got about $9 million of equity in the bank. about 20 million in the whole corporation, and we're leveraged in the bank about 5 to 1, so we still have more room for growth there. We made money. We made money in 2011. So while we're doing good and helping communities in Virginia, we actually had a 6% ROE, roughly 6% ROE last year, which is not bad in banking terms. We beat the banking average. We're a wholesale bank. We're not retail. If you come to, we have 2 branches, and if you come to a branch, we got $1,000 in each branch. We're not really in the business of doing daily retail consumer transactions. We don't have ATMs, we don't have credit cards. We're really a commercial wholesale bank. Now, you could deposit and buy a CD with us if you wanted to as a consumer because you believe in our mission. You would be what they call socially conscious depositors because you want to bank and park your money with someone who's doing good. And we'll take that money and we'll pay you a competitive rate for that. So anybody who wants to can see me afterwards, and I'll be glad to open up some CDs today. But we're never going to own your primary checking account. You don't want to bank with us. We don't have good online banking. We don't have checks. We don't have ATMs. We're just not convenient to where you live and work. But we do care about small businesses. We do care about commercial real estate that is mission focused. And we are growing, and we are going to need more capital. And part of what we are experimenting with right now is, this is great, we got this $15 million to get started, but now as we grow and we need more capital, where are we going to go, and how do we find people who understand impact investing and understand unusual models, and understand private, no real good exit strategy yet, but we're working on it, and are willing to invest in us and give us a shot so we can turn around and invest in Virginia communities. I would not be a good CEO if I didn't brag a little bit about some of the things that we've done. So real quickly, real solid loan performance. People, when I say community development lending, traditional bankers say, oh my God, risk, risk, risk. You can't do this without risk. Here's our portfolio. Today we got a portfolio of about $60 million outstanding total. We have delinquency that is as good or better than traditional banks. These projects, while they represent more risk than traditional lending, if you have good specialized lenders who understand how to blend government money with private capital and all the risks associated with all that, this can be done and be done profitably. It's what I proved when I worked at Wachovia. For Wachovia, it's the only way that our portfolio was allowed to grow to $2 billion of impact, because we were making money for the organization and doing good. And then now, as Wachovia is no longer, for other reasons other than their community development lending, we're trying this model outside of a big corporation. We have 0 charge-offs in 2010 and 2011. I'm not going to tell you we don't have some watch list credits. We have some credits that are struggling. We might have a charge-off this year. But all in all, I mean, that's part of banking. That's part of taking lending risk. I told you about our focus areas. Here's what I would tell you for Virginia, for people in government. That you took $15 million, you vested in us. We're lending $50 million per year. That portfolio churns. We're at a lending activity of about $50 million per year, with what was at the state at $15 million and only half deployed. So I think the wisdom of the government at the time was, okay, this could work a little bit more effectively if it were privatized. Now I'm done with business. Let me go back to mission. Here's the impact, the community impact that we've had since 2006. We've been able to help 3,500 affordable rental housing units. As the mortgage crisis heated up, a lot of people were being foreclosed on and displaced, and the need for affordable rental increased even more than what it was. We've been able to help main streets revitalize in towns like Floyd or Newcastle in Craig County. We've created and saved jobs during economic downturn. We've helped 4 community health care centers and brought primary care to counties that didn't have it. We saved 1 hospital. Patrick County, if anyone is familiar with Stewart, Virginia, had a hospital that was about to close. They would have had to drive to Roanoke, which is 2 counties over, to get medical service without this hospital. We were able, with the Tobacco Commission, to bring some funding in and get that hospital saved. It is now profitable. And we've been able to leverage about $360 million of total financing. We have 2 offices, one in Christiansburg, because I live in Craig County, and one in Richmond, because this state is big and it's hard to drive and cover it all. But this map is just kind of a pictorial to show you that we're really trying, with a team of 20 right now, to cover the entire state. And this kind of shows you where we've worked on community projects throughout the Commonwealth. Now, having said all that, I'm going to go back to impact investing because, let me make sure my slide and my note is matching here. What could we do if we had more capital? We took this $15 million and we started a bank. We have started some business modeling. We've brought tax credits in. We're growing. There's more demand out there. What could we do with more capital? We think we could lend somewhere between $70, $75, $80 million a year if we had more capital. We think we could create or save 650 jobs per year. As you read down this list, you'll see some of the things that we think we can do based on the need that we see out in Virginia's communities. But we're going to have to sit as an unusual model and find people who understand impact investing and want to talk about both a financial return and a mission return to try to bring more capital into this model. There's a lot that we can do. We can prove to you that we have a business model that's profitable in the subsidiary that's supposed to make a profit, and we think that we're a good investment going forward. But how do you meet the needs that are still out here? Here are some of the needs that we know of today that we've been able to quantify. There right now is identified a need for another $80 million of real estate financing for community health care centers. There are a lot of medically underserved areas in Virginia. They're in Appalachia. They're in Southside Virginia. They're also sitting in the middle of Richmond, believe it or not, in neighborhoods that, based on the density in the population, don't have enough medical care and access to doctors given the number of people in that whatever particular neighborhood. Small business lending. We all know that small business is going to be the generator that brings us back out of this recession, and a lot of banks are retracting from small business lending. We want to do more. Affordable housing. There are 30,000 units of affordable rental housing that are going to come out of government programs in the next 4 years in the Commonwealth alone, just in Virginia. So there are 30,000 people who are on limited incomes that are going to be at risk of not having anywhere to live. It's an issue that we want to be a part of finding a solution for. So one of the things that they asked me to do was kind of create some thought-provoking questions. And I love that because you're all going to sit at your tables today and you're going to help me manage this business that we're trying to build. Because these are questions that we're dealing with as a management team every single day as we try to build this bank. We have created impact and growth for some of Virginia's communities. There's a lot more work to be done. We have proven that we can do this in a profitable way and then give away some of our services in the nonprofit side. But as we grow, where do we find investors who care about impact? And when we find those investors and we talk about impact investing, here's a question for you. If you expect both a social return, I'm working in inefficient markets. By definition, where we're working is inefficient and we're blending 6 sources of funding to get one deal done. It's never going to be efficient. So if it's never going to be efficient, I can't work to Wall Street returns. So one of the big debates in impact investing is, can you do this and make Wall Street returns? My hypothesis is no. My hypothesis is that impact investing has to take some kind of social discount because you're asking mission work to happen in markets that are not efficient by definition. But debate that because I know it's a debate that's happening throughout the nation. How do you approach governance structures? If we're proving a model that says you can make money in this, what happened with the mortgage crisis is CRA proved that you could do more mortgages to lower income people and get them into home ownership. The problem is we proved it too well. We proved that there was a market there. We proved that there was a certain market segment that was being ignored and could be served. But then as we proved that, and started to make a little bit of money doing that, mission was lost, and mortgage brokers and others came into the arena and said, ooh, I could exploit this and get a lot of people, whether they're ready or not, and whether they've gone through classes or not, and whether they're really educated or not. If there's money to be made, we'll bring more money and we'll get more people. And so we ended up putting people in homes that weren't ready for home ownership, and the crisis unfolded. That's a whole nother speech for another day. But as you become successful and as you prove a market, more profit-driven capital is attracted to that. So what are the governance models that you have to put in place to assure that you have both your profit and your mission in balance, and you're constantly checking that balance as you grow? And then as we bring in outside capital wants voice. Money wants voice and influence in what it invests in. And that's great when you're mission aligned. But how do you sit and have those conversations to make sure before you just say, someone will walk up and say, okay, we'll invest $5 million in your organization. Yay. Huh. What are your values? It's not just what kind of return do you want. We got to sit and figure out what is the dialogue we have to have with investors to assure that we want the money. We may not want it. I mean, it's a novel thing to say that I may not want your money, but you're going to bring your voice, and I'm working on something more than just financial return, and so I got to make sure we're aligned as we move forward. And what questions should we be asking as we have these conversations? So that's my contribution to the table. Thank you. In true CEO style, I had to give you a little bit of information on your desk about, or your tables about VCC and who we are. We'd love to talk to you. We'd love to have you as a partner, an investor, a depositor, or even help you with a community solution that you're working on. A lot of you are mission focused around here, and we hope we could bring some capital to you. So thanks for listening, and it's been good to talk to you.